In this video, I'm going to show you the power of a trend line and how to use the trend line to do the day trading. Trend line is the boundary of the range. You can draw the trend line by connecting the highs and lows on the chart. Here are two examples. This line is the bottom trend line, and this line is the top trend line. Most of the time, trend line will go by pairs. We have both top trend line and the bottom trend line, but it is not necessary. For example, on the chart on the left, so we can draw another trend line here. It's at the top. And then for the chart on the right, there's no way that we can connect the lows here to form another trend line. Why we can trade the trend line? That is because normally the market will go between the trend line, and then when it reaches one side of the trend line, it's gonna revert back to the other side. So in the example on the chart, first we have a up leg, down leg, and another up leg. So at this moment, you can draw a trend line connecting the top as the trend line, and then you can also draw the bottom trend line like this. So when the market goes down to touch the bottom trend line for the third time, there will be a very good trading opportunity. And another good thing for the trend line is that the top trend line will serve as the profit target. So you'll be very confident that when it touches the third time on the trend line, it's going to bounce back to the upward, and then you can take profit around here. You may ask why the market moves between the two trend lines. First, human psychology. People will feel safe when they are within the boundary, or if they can see clearly where the boundary is. For example, if you ask me, so how long will it take for me to be break even by day trading? If I say it really depends on how good you are by identifying the trend and how good you are in mastering the trading techniques, then you will feel unsafe. But if I say, okay, normally it takes 1.5 hours for a beginner trader to be breaking even, you will be more comfortable for the second answer. Another reason is nowadays a lot of trading are done by the programming. So in order to do the programming trading, or maybe sometimes high frequency trading, you have a program based on the patterns and the statistics. So for example, if the market moves to a resistance line there, so the computer will trigger a large amount of short or sell there to prevent people from penetrating the resistance level. Trend line can either be upward or downward most of the time, and then there could be trading opportunities for both directions under some circumstances. So now I'm going to show you the trading opportunities for each of the scenarios. The first one is the third time the market touches the trend line. For example, when the market moves here, this is the third time it touches the bottom trend line. So you can put a buy order here and then target at the top trend line. If it touches the top trend line here for the third time, you can also put a short order and then to trade downward. One thing you should keep in mind is that there are not always trading opportunities for both directions. Only when the range is very broad, and then also the upward slope is not that steep, so you can trade both directions. Otherwise, if the trend line is very tight, we only trade with the direction rather than against the direction. The second scenario is that you can trade the second time touching the trend line. But how? Let me show you. So for example, the market moves like this way, and then it forms two lows here. We can draw a line here. However, it's not reaching to the top yet, and then at the top, there's only one high here. So what you can do is that you can draw a parallel trend line with this bottom trend line to the top here. Then you need to wait for the market to go up to reach the top trend line. If at this moment it reverses back like this, then you need to put a sell order at this moment. However, if it goes up and then penetrates the top trend line, then this parallel trend line won't work, so don't trade. The third scenario is the trend line break, and then at this moment you want to wait for the pullback and then trade accordingly. So in this scenario, It's not necessary to have two trend lines. Only one should work. For example, here, if the market goes down here and then it goes backward, however, when it reaches the trend line here, it ignores it and then penetrates it. So you need to wait for the pullback here and then trade upward. So for this trendline break trading opportunity, so it is possible that this market will go back to test the trend line, or it doesn't have to, or sometimes it's gonna just penetrate this trend line again and then reaches here and then goes up. So it doesn't really matter as long as it pulls back. So there's a good opportunity. Now let's take a look at example. This is the Euro future. So on this chart, it seems that there's not much trading opportunity based on trend line. However, let me show you how to trade the trend line. Let's make the chart a little bit smaller here, and then pretty much here you can draw a trend line around here. So you can see that even though here there is a small range touching the top trend line quite a few times, however, this trend line is still valid. And then at the bottom, after the around London Open here, this is the low and this is low. You can draw a trend line and then extend it a little bit. You can see that the market follows these two trend lines very well. So even here, it penetrates the trend line a little bit with a big tail, but it really doesn't matter. There are two trading opportunities. The first one is here. So it touches the trend line for the third time. So you can trade up. The reason that we can trade up is because these two trend lines, the slope of them is not that steep. So that's why we are confident that there could be a very good upward trading opportunity. Here, you might argue, okay, this is the fourth time it touches the trend line. This is the second time, this is the third time, this is the fourth time. So basically, for the overnight market move, we don't treat it like high or low most of the time. So this is the second time, and this is the third time. After that, what we can do is that extend the trend line. You can see that at this moment, the market penetrates the bottom trend line. It's a trend line break. So there will be another opportunity after the pullback. Another thing you can notice is that so the market goes back to test the bottom trend line again. So at this moment, the bottom trend line becomes a resistance line. So it goes backward down here. This is the second leg here. And then there's another third leg down here. If you enjoyed my video, please don't forget to subscribe, comment, and like. You can also go to my channel for more videos. Thank you.